Hi there, Bruce here from Voodoo Trading. Welcome to our YouTube series where we'll walk you through how we execute our systematic rules-based trading strategy. Please don't forget to subscribe below if you would like to follow our next 1,000 trades. In today's video, we'll review some of the strongest markets on our watch list, review the new buy and sell signals our trading strategy generated, and at the end of the video, we'll review the performance of our active trades. Every day after the market closes, we scan our trading portfolio of approximately 50 markets to identify the markets that are showing strength and should be added to our watch list. One market that we recently added to our watch list was the Aerospace and Defense ETF, XAR. This ETF includes holdings such as airplane manufacturer Boeing and space exploration company Virgin Galactic. This market could be reacting to the current geopolitical tension around the globe and a catch-up in new airplane sales after prolonged COVID restrictions. As a trend-following trader, we are more concerned with the actual price action in the market versus the reasons behind the increasing price. You can see on this chart that XAR is showing a nice trending pattern of higher highs and higher lows since the October low. You also notice that the price is well above the 200-day moving average, which is the blue line on the chart. You can also see from the chart that the 50-day moving average, which is shown by the red line, has crossed the 200-day moving average to form a bullish golden cross. The chart is shown is a one-year chart, so you can see that the prices are quickly approaching the 52-week high. Another market that we recently added to our watch list was the Joe ETN, or Exchange Traded Note, that tracks the coffee futures market. This market actually just made a new 52-week low at the beginning of the year, so it still may be a bit early to hit our buy trigger, but it has increased by over 10% over the past 2 months, so something interesting could be happening in this market, which warrants adding it to our watch list. You can see that the market recently bounced off the 200-day moving average and is currently trading below the 200-day moving average. If the price can manage to get above the 200-day moving average, the 6-month and 52-week highs are not that much higher and could trigger a breakout that would initiate a buy trigger. Another market that is probably still a ways away from triggering a buy order, but is showing some interesting price action, is the agricultural ETF, DBA. In fact, quite a few agricultural markets, such as coffee that we just discussed, along with soybean and sugar that we will discuss shortly, are held in this agricultural ETF. You can see that the market is currently trading within a channel, with the bottom of the channel around $19.20 and the top of the channel around $20.74. This market could become a trade candidate if it could break above the $20.74 price level. You can see that the price recently traded above the 200-day moving average, which is shown by the blue line on the chart, and is currently trying to bounce off this level. The 50-day moving average is turned up, and if the strong price action continues, could break above the 200-day moving average in the next couple of weeks. Okay, let's move on and review a number of trades that were triggered over the past couple of weeks. We were stopped out of a number of trades over the past couple of weeks. We enter every trade with the understanding that we will be stopped out of the majority of our trades. As I have noted before, even the world's most successful trend-following traders are only profitable on about 30 to 40% of their trades. If the trade doesn't continue to trend, you need to cut your losses and look for better opportunities. For every trade we enter, we always know where we'll get out before we enter the trade. We never risk more than 2% of our portfolio on each trade. We always enter a stop-loss order with our broker immediately after entering the trade. We don't get emotionally attached to the trade. We realize that each trade is just one out of the next 1,000 trades. The Gold Miners ETF XGD is a good example of this philosophy. You can see on this chart we entered the trade when XGD broke above its previous resistance level that is shown by the dashed pink line on the chart. The entry price is shown by the red box. You can see that after we entered the trade, it traded sideways for a few weeks before quickly reversing and hitting our stop-loss price, which is shown by the orange horizontal line on the chart. You can see that as soon as XGD hit our stop-loss price, we were automatically stopped out of the trade. The stop-loss exit is shown by the brown box on the chart. You can see that after we were stopped out of the trade, the price continued to fall below its 200-day moving average. We had a couple of other gold-related trades that we also stopped out of over the past couple of weeks. Another trade that we recently stopped out of was a China equity trade using the ZCH ETF. You can see that our entry price is represented by the blue box on the chart. The price broke through resistance, but then immediately retreated and hit our stop loss, which is shown by the brown box. After we were stopped out of the trade, the price continued down and bounced off the 200-day moving average. You can see that the ZCH ETF is technically still in an uptrend because it did not make a lower low, but the decline represented more risk than we were willing to take on the trade. We are also stopped out of a small cap ETF represented by XCS. Once again, we entered the trade when the price broke through previous resistance. The trade started off well, but then reversed and headed down towards our stop loss. You can see that in this instance, the price broke through and triggered our stop loss, as highlighted by the blue box, and then immediately headed back up. This is a common occurrence and can be quite frustrating, but is a necessary evil to protect our capital. As a trader, our main goal is to protect our capital. Every so often you want to review your historical charts to see if there are any opportunities to refine your trading strategy. If the bouncing off your stop loss level is a common occurrence, you may want to look at tweaking your stop loss trading rule to give the trade a little bit more breathing room. Okay, let's move on and look at a couple of new buy orders that our trading strategy generated over the past few weeks. This chart shows a new entry signal that our trading strategy generated in the commodity sector for the sugar market. This trade is in the cane ETF, which tracks the sugar futures market. You can see the breakout level that we were monitoring represented by the dashed purple line. We entered a buy on stop order to enter the trade as the breakout continued. It did, and our entry order was filled, as represented by the blue box on the chart. Immediately after we entered the trade, we placed a stop-loss order to sell if our maximum risk on the trade was violated. Our stop-loss price is represented by the brown horizontal line on the chart. Sugar is a nice uptrend, and we're hoping that it will continue with the full realization that we are wrong more often than we are right. Our trading strategy also triggered a buy in the Bitcoin ETF. Bitcoin is a controversial market to trade. People either love it or hate it. When we set up our market portfolio of approximately 50 markets that we follow daily, we are looking for a basket of diversified markets spread across the equity, commodity, money market, and currency sectors. Within those sectors, what we're really looking for is markets with the potential to trend and outperform the market. For that reason, we have chosen to include Bitcoin in our market portfolio. We let our trading rules mitigate the risk as much as possible. We entered the Bitcoin trend when the ETF broke above the previous resistance. We're risking 0.5% of our portfolio value on this trade, and we set our stop loss accordingly, as illustrated by the brown line on the chart. We'll let the trade play out and see what happens. The last new buy that our trading strategy generated was in the international equity market, which is represented by the XIN ETF shown on this chart. The international equity markets have been performing better than the U.S. over the past 6 months, so it is not surprising that this buy order was triggered. You can see that it has been in a nice uptrend since the October low. Our entry is illustrated by the blue box on the chart, and as always, as soon as our entry order was triggered, we placed a stop-loss order with our broker at the price shown by the brown line on the chart. Okay, let's take a look at our active trades. We currently have 7 active trades, and we're approximately 70% invested. The 3 new trades that we just discussed are highlighted orange in this table. Our active profitable trades are highlighted in green. It is interesting to note that these trades are all in the commodity sector. This is interesting because if you listen to the news, everybody is predicting that we're heading into recession, which would not normally bode well for the commodity sector. Times like this is where you really have to trust your trading strategy and take all the signals, even though it's emotionally tough to do with all the negative economic news in the media. You need to block out the media as much as possible and trust your trading strategy if you're going to be a successful trader. Once again, we're not suggesting that you should purchase the securities that we highlight here, but rather see the steps and the thought process that we go through to remove emotions from the trading process and systematically implement our trading rules. It is our belief that each trader should develop their own trading strategy that fits their personality and with rules they understand and can systematically execute. If you're interested in getting started in developing your own trading strategy, follow the links in the video description below to get access to some of our free trading strategy resources. Thanks for watching, and we'll talk soon. Good luck and good trading.